Alright, so wetin I dey try explain be say after I don do my top down analysis, okay, understanding the directional movement for a long time, okay, where the market will be trading to for a long time. So I understood that gold is trading down to this point right here, okay, and everything it has to do is down to this point here, right here. So no matter what, gold will still sell because after making this high right here, it broke structure here, then it respected these areas here, and then it's coming down to this area. So the sales will still continue, right? So me, I don't understand that. Say my higher time frame, okay, for a long time of trading gold, I will be looking for only sales, only solely sales, right? Solely sales, because the market is creating structures to the downside. So then I will come to the daily time frame, zoom in very well. Okay, zoom in very well. Then I saw that here, this is Friday, and sorry, this is Thursday, and this follow candle is Friday. Okay, so this Friday candle took out um this Friday candle took us this Thursday high. Okay, I remember I said I will mark out my Thursday previous day high and previous day low. Okay, then I'm waiting for the market to take up the high. All right, depending on which one is closer, although it doesn't work 100% all the time, but it works so many times, 80% of the time. So which one is closer, then I'll take it will take it out, and then I'll look for the change of structure to sell it to take it down here. That is what I just do. Okay, so for the case of Thursday, Friday opened, okay, so this yellow line here, this yellow vertical line is what I use to, separate the days, right? So when I go on a lower time frame, I'll be able to understand that, okay, this is where Friday started from. Okay, so I'm going to switch to a lower time frame. Okay, so I'm going to switch to 15-minute time frame. Okay, so that you understand everything that happened, right? So I have my indicator. Okay, this is session. It is called session. Just type it. You see it there, session. Okay, all it helps me to do is to know the session for the day. Okay, so that I'll be able to know when I'm coming to the market. All right. So I normally mark from that the timing I spoke about. It was because I was only using it on synthetic, so I just knew the timing. But on currency pairs, it is the session, this session indicator just helped me to know those timing, right? So now, if you look at it here, the market was reacting on a higher time frame zone, right? So I mark out my Asian high and Asian low. Okay, so my Asian high will be this candle wick. So this candle wick is my Asian high. This particular one, where the other block is, this one. So this is my Asian high. Okay, so this is my Asian high. So when the market now open, we start with the Asian session. So all I'm waiting for is for market to either take up this Asian high and change structure to the downside. But since this Asian high is close to the previous daily high, so I will expect it to take out the both of them and then change structure to the downside. Is then how I will now know that I am now going to target the low of that day. Okay, I hope you understand what I am saying. I will know that I'm targeting the low of that day. Okay, so now this market open, the Asian session began. So I know that this is my Asian range, right? So if you look at previous price action right here, you'll notice that the market reacted on a big zone, a higher time frame zone, and then broke structure. Broke structure. We are now looking at structure also. It broke structures right here. You see how heavy the candlestick is. broke structure here. Broke structure. Okay. Let me identify it with white so you see. So it broke structure. Okay. So after the break of structure, it respected this zone. So it did not take out the high. And then let's say you saw it, then you take yourself to target this place. Okay, let's just forget that. Fine, you did not see this trading opportunity. Then you came to London session. Okay, now when this London session begins, we have the high and the high here and the low of the London session. We see that this is the high and the low during the session. This gap in between is more like the gap towards a new session. So this is your resting gap, okay, or this is where you look for change of character or change of structure to do what? To take your buy or your sell. So we notice that here we have the high here. We did the same. We will do the same thing for the same thing you did for the Asian session. So we have the low here. We have the high here. So what the market did? Market came, took out the low, took out this low, okay, took out this low and begin to do what? Change structure. Although this was impulsive, you think of, oh, it is a sell because of it has broken structure. Let's say you sold when the market got to this point. Let's say you sold when it got to this zone right here. Let's say you sold when it goes to this zone here. Sold. And then when you sold, it then hit your stop loss. Okay, it hit your stop loss. That's why I told you stop loss is very important. Let's say you sold here, and then it hits your stop loss. You put your stop loss here. It hits your stop loss. Fine, it hits your stop loss. Then when you hit your stop loss, you now know that, oh, because of how this candle closes inside this zone, see how strong the candle closes inside the zone. It means that the market is about to flip, to change from buying to selling. So you look for the last order block that caused this strong move, that invalidates this your sell setup. Okay. Then now you look at it this way. So it has taken the low, and it came to take the high, and then broke structure to the upside. So you need look for the next zone that creates the break of structure. Come wait for the retest before you take a buy, and that is exactly what happened. Now if you go to a lower time frame, like the 3-minute time frame, you see how clean it is. See how clean it is, and then you target your 1 to 4 risk to reward ratio, and then you make your money and go off. Right? See how clean it is. See how clean it is. This is where you took the loss. The break of structure happened, and then the market came for a flip. See the zone, came to the zone, and then flipped to the upside. Let me off the session so you see it. And then flipped to the upside. See it, clean 1 to 4, clean 1 to 4, and you are out of the market. And then look at your target. Look at where you target. You target the previous high, and you are out. Right? You are out, and that is it. You are done for the day. Okay. So that is just it, my brother. That is just what I discovered. So timing is very important.